Welcome to the channel where we provide objective commentary on the economy, cryptocurrencies, and Bitcoin. We're going to go right in because we have a lot to cover in this video. To begin with, keep in mind that I am not a financial advisor. Always conduct your own research and due diligence. Past performance is not a reliable predictor of future results. Additionally, if you are a new channel subscriber, this chart has been playing ball quite flawlessly, and I know many of you are familiar with it when it comes to the macro market cycle. The difficulty in determining our exact location increases as the cycle progresses though, and this is one of our challenges. And that's because, in theory, we've finished a 5-wave structure, and the top may appear at any time. However, time analysis still indicates that more work needs to be done. I have been searching for a wave 5 extension because of this, and it is still going pretty well so far. However, as the cycle draws to a close, I'm working very hard to identify the substructure waves so that we can determine the high likelihood places where tops or bottoms might be approaching and see any early trend shifts that might indicate something is off. Thus, this continues to be the highest probability count I am monitoring in terms of the macro market structure. However, it is a little more difficult to pinpoint our exact position when it comes to the shorter-term substructure. Therefore, even if I think we are in wave 5 of the macro cycle, we need to keep an eye on the numbers 1, 2, 3, 4, and 5 in order to break down this last wave 5 in the short run. To dig any further indicates that we are in wave 3 of the last leg. We seem to be within wave 3 as well. Based on the substructure of this wave 3, now that I've thrown out a lot of statistics, I run the danger of losing some of you. I'm attempting to figure out where we are in this wave 3 of wave 3 by being more specific. Here is the gray count where I have deconstructed this wave 3 substructure. Additionally, this arrow, which aims to dissect the substructure of this already brief wave 3, is seen here. Bitcoin has already broken down on the weekly timescale to create a weekly swing top, as you can see here, as it struck a new bottom in the previous week. This is in contrast to the overall market cap, which is what this chart compares to. In contrast, the market capitalization as a whole is still steadily increasing. There is some uncertainty as to whether we have witnessed enough of a correction to print a short-term wave 4, or whether last week's liquidations actually caused enough pain to position the market for another leg upward. In any case, if the macro trends are positive, none of this really matters to people who are just concerned with the wider picture. The market is still in its all-time high territory, and we haven't seen the breakdown signal I've talked about in detail, which is a break below about 3.5 trillion, followed by a close and lower highs. If that happens, it will be necessary to reevaluate the market's overall framework, at least about this count that I am tracking. Naturally, I will revisit this topic in subsequent episodes as we continue to map out the cycle's final stages and go into the specifics to determine our position within these shorter-term waves. I'll start by going over a few altcoins, starting with Ethereum, before moving on to Bitcoin on the daily chart, where the trend has slowed, and the 4-hour chart, where we are beginning to notice some minor indications of weakness, but also one of my favorite breakout signals. Even if ETH has now fallen back below the $3,800 pivot mark, the bulls are still in control and the trends are still upward. However, it will be a red flag that ETH may eventually chop around in this range once more and could return to test the range lows if we do see some consecutive closures below this level, followed by a lower high. ETH did therefore break above that pivot point, but it was only able to hold that position for one daily close before falling back below. Therefore, there is still a degree of uncertainty, particularly in light of all the excitement leading up to Monday's peak last week. This is basically a case of general indecision. Although the bulls are still dominating in general, be cautious of that short-term breakdown signal, as it may suggest a significant correction. In terms of market observation, I do believe that the next swing will push ETH into new cycle highs over that 4,100 peak from December of last year if we can swiftly break back above that $3,800 and begin to hold. Before finding some support just below the even $4 psychological barrier, SUI was rejected outright from $4.40. Although there is some doubt in the short term after being rejected so forcefully off that level, the high time frame bulls are still dominating because we haven't seen a breakdown below the $3.60 pivot point I mentioned in yesterday's video. A break over $4.20, followed by some close and higher lows, is what I would want to see in order for the short-term bears to return to the bull camp. Anything above that level still has a significant chance of failing. We can hold above that $3.60 in the long run, but if you are concentrating on the SUI short-term charts, do keep that in mind. Even yet, it creates the possibility of another surge higher and another lower low. it might simply take a little longer. As of right now, XRP remains trapped between $3 and $3.40. For the past few weeks, or at least since we've been up here during this time, we've been getting ready for this. The market is expected to return and hit that $3 support zone, which it has done, and we are watching for a break below the prior significant high, which was the all-time high at the time. Right now, all we're watching for is some erratic market movement inside this range until we see a distinct breakout on the upside or a breakdown on the downside, after which we can begin to consider the next turning points. Again, this range has a high probability of being a choppy zone, so until that happens, I'm not particularly concerned about anything in it. Since I do think there is some potential if and when we can get back on top of about 95 cents, I'm going to bring Cardano back to life. Cardano will reach its halfway point from its significant fall, which began in December of last year and ended in February when it actually bottomed out, before many other markets, if it breaks over 0.95. An extremely bullish indicator known as a macro triple bottom is in action right now. The trend line from the cycle high to the macro lower high, which is also very close to the trend line from the all-time high to the current cycle high, and the halfway point would all indicate bigger and better things for Cardano. At the very least, I'm watching for a retest of cycle highs, and there's a good chance that it will go through, possibly even rising back up to that $1.66 price point, with the potential to continue from there. However, if we can get that confirmation signal overhead, there's clearly a fair amount of room in it to rise to those next pivot points. Therefore, there is still work to be done before Cardano actually reaches that position. Keep in mind that it might not, but if we can get that confirmation overhead, I am watching for a much healthier looking chart here, where we will probably be returning to retest some important pivot points. We will now examine some market data before delving into Bitcoin on the daily and 4-hour charts. To begin, we will examine the daily exchange volume, which is essentially our liquidity chart. In order to truly achieve a higher low, we have been watching for the possibility of a slower market for volume to decline. That's what's going on right now. At our peak, we were making almost $75 billion every day. All I really want is for us to print a higher low above about $50 billion per day, as that would be the confirmation signal in terms of liquidity, which greatly raises the likelihood that all us will be going on another big run. Right now, we're down to about $70 billion per day. We'll be hitting that higher bottom, which implies that there will be greater volume and liquidity on the next move up, which will undoubtedly result in more individuals entering the market. Thus, everything is still going well here. Thus, everything is still up for grabs, and we constantly consider both sides of the market. This is just another false flag if we fail to reach the greater low of $50 billion and instead go below it. False signals are nothing new to us. As you can see, we broke a top here in January and then fell back below. In May, we experienced it once more, breaking some peaks and falling back below. Therefore, let's hope that the same false break signal doesn't occur. I will revisit this slower moving target in later episodes, but as of right now, I don't think it will happen this time. Regarding some of our other market data, we are witnessing a robust 24-hour increase in volume, which is up approximately 34% to $328 billion. However, with our long-short ratio at a 5% difference, we are witnessing a significant bias to the short side of the market. This is really enormous. Since the market is favoring the short side and we know that markets dislike being out of balance for extended periods of time, this suggests that we will be popping back up to try higher prices to wreck some shorts. However, because the market is currently relatively quiet and our 24-hour liquidations are also relatively low, I am a little concerned about the signal at the moment. However, watch for a quicker recovery if there is a significant increase in liquidations while this imbalance persists. Now that we have a break below our trend line and a close below our trend line for the first time, let's go into the charts. Let's start with the daily period. I'm talking about this trend line, where price activity has recently held below it while the market has been comparatively robust above it. Therefore, there is a short-term indication of weakness, but overall we are trapped within a range, so we simply need to ignore any significant indications until we see a distinct breakout on the upside or downside. The one-day, one-bar trend has been declining since yesterday's session. The TI8 Gantt Swing Pro is being used here. Though it hasn't yet triggered anything on the 2-bar or 3-bar timescales, this confirms the bearish bias in the very short term. You can test it out for free for 7 days if you'd like. However, the likelihood that the period of a higher degree will likewise flip back down increases if we do experience any convergence on those longer-term timeframes, the 1-bar and 2-bar. That favorite signal I mentioned earlier is the 4th time breakout signal when it comes to the 4-hour time frame. In either direction, fourth-time breakouts can occur in either horizontal or diagonal patterns. In this instance, the market frequently breaks through and makes a real move when it approaches the price for the fourth time, because we have three tops around the same price with a diagonal trend line. I'm currently keeping a careful eye on that for the overhead. What appeals to me about this signal is that it will also be a breakout over our 50% mark from the peak to the correction low. We would therefore be seeing strength on several indicators if something similar occurred, which does indicate that the next pivot point overhead will probably be retested. The high time frame indication I've been following is for us to experience some near and high lows above $120,000, but that's a short-term signal. Therefore, that still holds true. This signal is merely a preliminary indication that the high time frame confirmation may be imminent. The market would be alerted if the bears were to maintain their hold over these brief periods, and we began to witness some close and lower highs below $117,000 in the process. It would raise the likelihood that we would return to retest the range lows and could even break through if we do witness something similar. Since nobody can predict the future, I am, as usual, keeping a close watch on both sides of the market. It all comes down to establishing a plan of attack so that we know the important levels to watch for and nothing will surprise us too much, regardless of what the market does. I would strongly advise you to become a member of the Investor Accelerator community if you are a new subscriber to the channel. Get your hands on the upcoming edition of our Economic Bitcoin and Altcoin Report for free.